I need you to stop what you're doing and listen to me very carefully. For the last 40 years, you've been sold a promise. It is the American dream packaged into a financial product. You were told to go to work, keep your head down, and funnel a portion of your paycheck every 2 weeks into a tax-deferred account. You were told that if you trusted the system, if you trusted the market, and if you trusted the 401k, you would arrive at the finish line with a golden nest egg. They lied to you. What they didn't tell you is that the entire 401k experiment was designed for a demographic reality that no longer exists. They didn't tell you that the system relies on perpetual growth in a world that is drowning in debt. And they certainly didn't tell you what happens when the mathematics of Power's peak 65 collides with the GIM system of the beast. Right now, a silent tsunami is forming off the coast of the global economy. It is not a stock market crash. It is not a housing bubble. It is a demographic liquidation event. As of 2024, we entered the peak 65 zone. For the next 4 years, more than 11,200 Americans will turn 65 every single day. That is 4.1 million people a year. Why does this number matter? Because for the last 4 decades, this massive generation was buying stocks. They were buying bonds. They were the engine of asset inflation that made the 401k look like a genius invention. But now, they are shifting from net buyers to net sellers. They are hitting the required minimum distribution age. They are about to start selling their assets to pay for groceries, healthcare, and electricity. Mathematically, who is going to buy what they are selling? The younger generations are broke, saddled with student debt and inflation. The foreigners are de-dollarizing. This is the 401k endgame. We are looking at a market that is structurally guaranteed to face selling pressure for the next decade. And this is happening at the exact moment the system of the beast, the interconnected web of central bank debt, surveillance finance, and currency debasement, is tightening its grip. If your wealth is trapped inside their system, you are the liquidity they are going to use to bail themselves out. In this video, we are going to deconstruct the trap. We are going to look at the target date fund time bomb ticking inside your portfolio. We are going to expose why the SAPEs, the safe enough assets in your 401k, are actually the most dangerous. And then we are going to show you the exit. We are going to talk about the strategic pivot to tangible assets, specifically silver, not just as a trade, but as a survival mechanism. We will explain why industrial demand and geopolitical shifts are about to propel silver beyond the reach of the paper market, and how you can position yourself on the right side of the greatest wealth transfer in human history. The system was built to trap you. It's time to find the key. Let's tear down the illusion. Most people think their 401k is money. It is not. It is a claim check. It is a digital entry on a ledger owned by a custodian, regulated by the government, and invested in financial derivatives. The bedrock of the modern 401k is the target date fund. You know these funds. They're designed to shift you from risky stocks to safe bonds as you get closer to retirement. If you plan to retire in 2030, the algorithm automatically loads you up on government debt. This worked when interest rates were falling for 40 years. It was a risk-free return. But we have entered a new epoch. We are in an era of structural inflation and fiscal dominance. When inflation rises, the Federal Reserve has to raise interest rates. When rates go up, the price of bonds goes down. In 2022, we saw something that wasn't supposed to happen. Stocks crashed and bonds crashed with them. The safe portion of the 401k portfolio lost double digits. This wasn't a glitch. It was a preview. With the U.S. national debt spiraling past $36 trillion, the government has to issue more treasuries to pay the interest on the old treasuries. This oversupply of debt pushes bond prices down. If you are in a target date fund approaching retirement, you are being algorithmically forced to buy the very asset, U.S. government debt, that is mathematically guaranteed to lose value in real terms. You are buying the debt of a bankrupt nation. And remember the peak 65 tsunami? When 4.1 million people start selling their assets to Lev, they aren't just selling stocks. They are selling those bonds. They are selling mutual funds. This creates a liquidity vacuum. In a normal market, there's a buyer for every seller. But in the end game, everyone is rushing for the same exit door at the same time. The liquidity won't be there. We saw this in the UK pension crisis of 2022. We saw this in the Silicon Valley bank collapse. When the system needs liquidity, it freezes. If your wealth is locked in a 401k, you are a captured audience. You cannot move fast. You cannot exit on a Sunday night when the news breaks. You're strapped into a roller coaster that is missing a wheel. This is the system of the beast. It relies on your compliance. It relies on your passivity. It relies on you believing that markets always come back. Markets do come back, but currencies don't. And your 401k is denominated in a currency that is being debased to keep the system alive. To understand the urgency, you have to look at the macro picture. We are not in a business cycle. We are at the end of a long-term debt cycle. The United States is currently paying more on interest on its debt than it spends on its entire defense budget. We are borrowing money just to pay the interest on the money we borrowed before. This is the definition of a Ponzi scheme. And like all Ponzi schemes, it requires new money to keep going. Where does that new money come from? It comes from the printer. The Federal Reserve is trapped. If they keep interest rates high to fight inflation, they bankrupt the government and the banking system. If they lower rates to save the government, they unleash hyperinflation. They have no good options. They only have the reset. The reset isn't some conspiracy theory. It is a historical inevitability. When a sovereign nation can no longer service its debt, it defaults. But the US won't default honestly. They won't tell you, sorry, we can't pay. They will default dishonestly. They will default through inflation. They will pay you back in dollars that are worth half of what they were when you earned them. Your 401k might show a balance of $1 million. But if a loaf of bread costs $50, what is that $1 million actually worth? This is the nominal illusion. The system wants you to feel rich in nominal terms while they rob you in real terms. And getting out of the system is becoming harder. We are seeing the rise of central bank digital currencies, CBDCs. We are seeing increased surveillance on transactions over $600. The beast is building a fence around the digital financial system. They know the debt bomb is ticking. They know the demographics are turning against them. They know the pension funds are underfunded. They need your capital to remain trapped in the system to provide the collateral for their debts. This is why you hear financial advisors telling you to stay the course. This is why the media mocks gold bugs and preppers. They need you to stay asleep. But the smart money, the billionaires, the central banks of the East, the family offices, they are waking up. They are quietly exiting the paper casino and moving into the only thing that the system cannot print, cannot hack, and cannot cancel: tangible assets. The antidote to a digital debt-based system is physical reality. In a financial reset, wealth is not destroyed, it is transferred. It transfers from those who hold paper promises to those who hold real things. We are witnessing a great rotation. Central banks bought more gold in 2024 and 2025 than at any time in history. Why? Because they know the dollar system is ending. They are de-dollarizing their reserves. If the entities that run the monetary system are moving to hard assets, why is your 401k still 100% invested in paper? Tangible assets, land, energy, commodities, precious metals, are the only hedge against the system of the beast. They have no counterparty risk. A bar of silver in your hand does not rely on a CEO's promise, a bank's solvency, or a government's tax policy. It simply is. But not all tangible assets are created equal. Real estate is tangible, but it is immobile. It is easily taxed. It is dependent on the local economy. Gold is the king of money. It is the ultimate store of value. It is the shield. But if you want to protect your wealth and grow it during the collapse of the old order, you need more than a shield. You need a sword. You need an asset that is statistically undervalued, structurally indispensable, and historically prone to explosive upside when the paper system breaks. You need silver. Why silver? Why is this specific metal the Achilles heel of the banking cartel and the life raft for the informed investor? Because silver is the only asset that straddles two worlds. It is a monetary metal, and it is a strategic industrial metal. Let's look at the industrial demand surge. The system of the beast is building a digital prison. They are building AI data centers, 5G surveillance grids, smart cities, and electric vehicle fleets. Here's the irony. They cannot build the digital prison without physical silver. Silver is the most electrically conductive element on the periodic table. You cannot build a high-performance computer chip without it. You cannot build a Tomahawk missile without it. You cannot build a solar panel without it. The solar industry has shifted to TOPCon technology. This new tech requires 50% more silver per panel than the old tech. This is inelastic demand. A solar manufacturer cannot simply stop using silver because the price goes up. Without silver, the product fails. We are seeing a supply shock. For the last 5 years, the world has consumed more silver than it has mined. We are in a structural deficit. The above-ground stockpiles in London and New York are being drained to fill the gap. We are entering a period where the paper price of silver, the fake price set on the futures exchange, is colliding with the physical reality. When 4.1 million boomers retire, they aren't buying silver, but industry must buy silver. Nations like China and India are hoarding silver. The beast has suppressed the price of silver for decades via the paper markets to keep the illusion of a strong dollar. But they are running out of physical metal to back up their paper manipulations. When the vaults run dry, the price reset will be violent. Silver is currently trading at roughly 1/80th the price of gold. Historically, it comes out of the ground at roughly 1/8 the ratio. Geologically, it is becoming harder to find. This creates an asymmetric bet. The downside is limited by the industrial floor. Industry needs it to function. The upside is uncapped by the monetary explosion. If the dollar collapses, silver rises as money. If the economy booms with new tech, silver rises as an industrial input. If we go to war, silver rises as a strategic material. It is the unsung hero, because it works in every scenario except the one where the status quo remains perfectly stable. And looking at the debt, the demographics, and the geopolitics, does anyone believe the status quo is stable? Your endgame strategy, beyond the beast. So, what is your endgame? If you leave your wealth trapped in the 401k, you are betting on the system. You are betting that the government will fix the debt, that inflation will vanish, and that 4.1 million retirees selling their assets won't crash the market. That is a bet I am not willing to take. Here is the endgame strategy. Step 1. The breakout. You need to investigate your options for moving funds out of the regulatory capture of the standard 401k. If you're still employed, look for in-service distributions or brokerage link options that allow you to buy physical assets or at least get out of target date funds. If you have old 401ks from previous jobs, you have the keys to the handcuffs. You can roll those over into a self-directed IRA. Step 2. The physical pivot. A self-directed IRA allows you to hold physical gold and silver, not a paper ETF, not a mining stock. Actual physical bars and coins stored in a secure non-bank depository in your name. This removes the counterparty risk. It takes your wealth off the grid of the banking system while keeping the tax advantages. Step 3. Possession. Beyond the retirement accounts, you must build a sovereign stack. This is wealth held in your immediate possession. No intermediaries, no reporting, just you and the asset. Silver is perfect for this. It is divisible. It is tradable. In a true crisis, you can use silver coins to transact for goods and services when the digital systems are down or when the currency is hyperinflating. Step 4. The mental shift. Stop looking at the wealth in your 401k as dollars. Start looking at it as purchasing power. If your 401k goes up by 5% but inflation is 10%, you're losing money. If silver stays flat but the dollar loses 20%, you have preserved your wealth. You need to stop chasing yield and start chasing truth. Conclusion. The future is tangible. The system of the beast thrives on complexity. It thrives on derivatives, algorithms, and rehypothecation. It is a house of mirrors designed to confuse you until it is too late. But the solution is simple. The future belongs to the tangible. It belongs to the resilient. The peak 65 wave is crashing. The debt bomb is ticking. The industrial vacuum is sucking the vaults dry. You have a brief window of time to act. The premiums on silver are still reasonable. The availability is still there. The laws still allow you to exit the system. Do not wait until the news anchors are screaming about a liquidity crisis. Do not wait until your 401k is frozen for your own protection. Take control of your legacy. Diversify out of the paper promises of a bankrupt empire. Secure your future with the metals that built civilizations. The endgame is here. The board is set. It is your move. Class dismissed.